Hey guys, thanks for checking out the video. We did a video a couple months ago that went a little bit viral and got a lot of feedback on it, and we've done a couple follow-ups. It's a reverse iron condor. And every time we do a follow-up, we get more questions. So I got a few messages and some folks wanted to see an update, how it was doing, and a few iterations on it. So we're going to jump in. This is a really interesting strategy because in the markets right now, we've seen a period of a little bit higher sustained VIX, higher volatility than we've seen in several years. This is actually a strategy that benefits from intraday volatility. So let's take a look and see how it's done. So the first thing we'll do is we'll just look at the backtest that we did in the video. It ran until November 14th. So we could run this a couple different ways. Let's run it. We'll just do this. We'll start the test at that date and we will end it at yesterday. And as we can see, the backtest has still continued to do pretty well. Note, when you're looking at backtests, obviously, the more examples you get, the more robust your test is, right? As a general rule, this only has 35 examples, not a super big statistical size. I will say today, as I'm recording this, the market's down quite a bit. So in barring a historic move in the last hour, this probably will be another max winner today to the downside. So as we look at it, we can see that, again, we're backtesting with only 2.5% of a portfolio. So I say only, that's about sized to do a one lot. So if you look, you can see that it is a one lot. One thing that would be interesting to test, let's just run at 5% and see if it takes any more trades. So right now, before I do that, we've got 35 trades. Let's run this at 5% and see if this trade has been more expensive than that. At any point, it has not. So we'll go back to the 2.5% to stay consistent with what we did in the backtest. So as you can see, it's still done okay. And let's also just run it year to date. It's going to be even worse sample size, even smaller sample size. Just out of curiosity, it's done okay. Our capture rate, 4.3%. Nothing to exactly write home about. It has been P plus PE. If we compare it to the long term, actually, the capture rate's not totally out of line. As we look at it from November 14th to February 20th, capture rate of 5.9%. If we look at it, let's go back to that original example and we'll run it from 2020, where we had it in the start of the first video, until yesterday. So this is going to give us 2020, 2021, 2022, 2023, 2024, and a month and a half into 2025. So this is going to give us over 5 years worth of data sampling. So not going to give us an insane number of trades, but 464 trades is decently significant. And again, just to review the setup, if you're new, all this is an at the money. There's a couple ways to describe it. I call it a RIC, reverse iron condor. You could more accurately call it a reverse iron fly, but a RIC sounds better. You could also say you're buying a long straddle. You're buying the at the money and then you're selling out of the money. There's a couple different ways. And this is a very simple fire and forget. So what happens is you pay anywhere from maybe $15 up to 23, 24, and you do nothing. You do nothing. It simply expires because we're in SPX in this backtest, a cash settled vehicle. You hold it till expiry. So the max winners are about a $30 value. Because we're using percent based here, that will change over time. Right now in recent history, you're paying about 20-ish. Like I said, it varies. And your max winner will be about 30-ish. It wins about 2/3 of the time. Your winners are smaller than your losers, both averages and maxes. However, because you win almost 2/3 of the time, that's how you can get a decent capture rate and a decent CAGR. And again, I say this in almost every video, but it's super important to understand. This CAGR and the max drawdown is what give you the MAR ratio. And it drives me crazy when people throw out a MAR ratio with no context. So we are allocating only 2.5% of our portfolio. If we want to make this trade look different and probably better, we just have to juice this. So if we juice this up to 15%, watch what happens to the MAR. Right now we're at 2.5%. If we juice it to 15%, that's 6 times the allocation. And it's a scaling allocation because the backtester is sizing up or down the number of contracts that you're putting on. Makes sense, right? Watch what happens when we do 15%. The MAR changes, everything changes. The capture rate changed. The ending capital obviously changed. The MAR went up a little bit. And that is, again, let's look at it in a log. You can see it's been pretty steady. And 2020, a little bit of a down year. It had COVID. So, right, the only indicator for this going on was a VIX overnight move down. We're just doing 0.01, so a very small move down. To clarify again, how are we measuring that? We are looking at the 415 close, and then at 932 is VIX up or down. Again, the only thing we're looking at is, does VIX open up down or not? So as you can see, this thing has, in recent history, it's done okay. It will be interesting to see. Again, today's going to be another winner, so we'll have a 465th data point. It will be interesting to see what vol does and what the market continues to do, because we continue to have, we were at about a 15 VIX today, I think, maybe a 100-point move. Continue to have some pretty large moves in relation to what the VIX is pricing options at. So a lot of folks have done well going long. And that's where the whole thing about equating 0 DTE with premium selling is an inaccurate and incomplete picture of what it is. And a lot of people do both credit selling and long volatility or debit strategies, depending on what the market is doing. So that's all possible with the backtester. There's a bunch of different filters. This one is very simple. It's not curve fitted. We're using exact DT. One thing that I can do here that is interesting, let's go back to the 2.5. Okay. We've got the most recent run. We're going to do one thing. A lot of times Monday is a little bit of a unique day. And in the backtester, if you click frequency weekly, you can change which days you want to run it. We're going to run this and exclude Mondays and see how it does. Because what happens on Monday is a lot of times VIX behaves a little bit differently. And there's people much smarter than me that can explain it, but VIX is up typically Mondays, a lot of times even if the market is up. And so a lot of folks don't trade reverse condors on Monday for that reason, because the VIX looks a little bit different on Monday. As you can see, the MAR went up a little bit. Let's go back to our OG trade. We can compare this. We want the February 20th. We've got so many different ones here. But fortunately, it's pretty easy to click around. So we're at like a 1.7 MAR with trading it every day. And if we trade it only on every day but Monday, we're at a 1.9 MAR. So a little bit higher MAR as you would expect. The ending capital is a little bit lower, but the MAR is higher because the max drawdown is lower. So something else, just another thing that you can test in Option Omega. So thank you so much for watching. As always, it helps us if you like and subscribe. We're running a beta for the Option Omega automation platform. You can jump in and sign up to be on the beta waitlist. We are onboarding people to the beta weekly, and you can get your spot in line. Thanks so much.